There's your setup, everybody. Stocks, as you can see, they are sliding. Dow's down 300 points right now, off more than 1%. Concerned about trade talks. The S&P, as you just heard Rick talk about, breaking some key support levels, struggling to stay above 2,900 on the S&P. We're at 2,902, and you can see small caps. They're getting hit more than the others, down 1.5% today. But Rob, I will start with you, my friend. Here's the question.
I'm one of the tops in the county.
It is a very rich county.
In this county, there's thousands, by the way. So that would actually
one of
be
the
something.
top counties.
Here's my question. I mean it for real, though, which is this. At what point does the trade fight simply become trade? And what I mean by that is this has been going on for 2 years. We keep waiting for it to end. What if it doesn't? At what point do we start to think about the markets and structuring our portfolios like maybe this is just the way trade is going to be until we're old, maybe, or not?
Until we're old?
Yeah. Older.
Right. Well, I will tell you that we de-risked a week or two ago because we think trade is a risk to stay, at least in the short run, because there's not really the political motivation to advance it, at least to where it needs to be advanced to in the short run. In the intermediate term, we do think there is that political motivation that exists, and you should get a deal ultimately. That's what's going to happen. I think that the one thing that the market's struggling with, and it is all about trade right now, but there's also this pervasive fear of, are we going to enter into a recession? And I think those fears are overblown. The consumer is just too healthy right now. Housing's healthy. It's not likely that we're going to have a recession in that type of environment. In addition, on the one hand, when you think about what are the risks to the upside, even though we're slightly underweight equities right now, it's that in this growth and inflation paradigm, what is the right multiple to pay for stocks? Stocks are at 16.8, 17 times right now. But when you have solid growth, not decelerating, but solid, in low inflation, you could get a multiple re-ration higher if you see some of these issues fade to the background, and we think they will next year. So in the short run, I say we're slightly underweight risk, mindful of the headlines, but still cognizant of the fact that we're unlikely to head into a recession next year.
Well, Kari, I think you got my point. I mean, I saw you nodding. The definition of insanity, doing the same thing over and over again and hoping for a different outcome each time.
Yeah.
And we've been waiting for this trade deal for 2 years.
Right.
At some point, you just have to accept this is not a trade fight.
Right.
This is just trade. This is the way it's going to be.
Well, you have to stop thinking about it. And in fact, the market has been waiting for the deal. The deal isn't happening. So we're starting to have earnings. The market's today very worried about what those earnings will look like. And they were expected to be down a couple of percent. They might be down more. Guidance will be weak. But here's the silver lining about the market. We're trading back and forth across this 2,900 line on the S&P. When you get to 2,800, if you go down a few more percent, people start to say, hey, wait a minute. Here we are at 15.5 times earnings. Even if you take those earnings estimates for 2020 down 5% from where they would have been otherwise, and it's a cheap market. And then people buy because what are you getting? 1.5% for 10 years? You can take a bet and try the market because you'll get the same yield or higher, and you get an option.
So valuation may provide a floor. But, Stephanie, what if tariffs go up again? And they could on October 15th. Another 5%.
Not good. It's impossible to deal with this trade and to trade around or invest around the trade issues. It's impossible. I also think, though, that the economic data, we need a couple of wins. We had a disappointing PPI today. NFIB still at 101.8. The average is 98, but down substantially from its highs. The ISM's from a couple weeks ago. Yeah, we had a good employment number, bad wage number. So, I mean, I think we just need some wins here economically for us to kind of get our footing. And then we will have earnings. And I think earnings, for the most part, will be a little bit better than feared. But from now, what I'm doing, I'm just trying to pick stocks that are not impacted by trade. So
like who?
Like VF Corp. Great brands, great free cash flow.
North Face, Vans.
Vans is hot.
Yeah,
it's
Vans red hot.
And free cash flow, $8 billion over the next 3 to 5 years that they're going to generate to plow back into.
And maybe a slight tariff on the shoes, but not enough to dissuade that kid from being like, Mom, I want the sneaks.
Right.
You know, and they're 55, not 53.
Right. So that Baxter, I'm buying. Great turnaround story. Great management team. A little expensive, but I like defensive within healthcare because you don't have the political risk. Apollo, I have been buying. D.R. Horton, I have been buying. So I'm just trying to find stuff that I feel good about. And when it does fall on days like today, that's what I'm doing. Yeah, I mean, I guess, John, when you look at the situation, you talk about we just blacklisted 28 companies in China. Hike Vision, Smart Sense, a few others. I mean,
we're not any closer, it doesn't appear, to a deal. What if this drags on for a year, for 2 years? That's kind of my point. How do we, if you keep waiting for this big moment to happen and it never comes,
right?
You've got to be prepared in any event, in any market structure.
True, and this one wasn't just the tweet alone. It was also, they're pushing back pretty hard on a Muslim minority population in China, and there's also the issues about spying, like the Ambarella hit today that it's taking, Brian.
Yep. On the Hike Vision News, because that's a major customer. Yep.
Exactly. And that stock immediately fell 8%, then 10%, then 15%. It's got a little bit of a bounce from that, but it's at a pretty critical level, by the way, also, Ambarella. Right here around the 49 number for that stock is a fairly critical support level. If it breaks through there, I think it goes significantly lower. I don't know that it does. It seems to want to find that bottom here, but this is a big drop out of that.
And there is a little bit of a narrative, Pete, going around that you want to find companies that maybe where the puck is going, not where it's at. And what I mean by that is if we're not using some of these Chinese technologies, I think there was a report last night that some people are pushing the U.S. to support Ericsson and Nokia. Remember those names?
Sure.
Yep. Try to basically, and I don't want to say rebuild because that's insulting, but you make sure they're capable of adding the business. Do you want to take a chance or even bet on companies that may win because their Chinese counterparts are getting slammed?